What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future of this company. I'm also going to break down why it is possible for us to drop a little bit more with the market before we get a really nice bounce and we do see a bit of a comeback very soon. I do think we're going to have lots of green very soon for Tesla. I have not lost faith whatsoever. I'm going to show you the many indicators that suggest that Tesla is going to make a comeback quite soon. I'm also going to break down why the market dropped the way it did today based off what the Bank of England announced, what worker output data is showing, when CPI is coming out next week, and what Tesla confirmed that's huge for the Shanghai Gigafactory. I'm also going to end the video by showing you the exchange from the Queen Cathie Wood and the legendary Elon Musk, as they did have an exchange about the markets and Tesla's future, which I think is very important. Now, before I talk about what Cathie Wood said, what Elon Musk said, what's going on with the markets, and how Tesla, I believe, is going to make a comeback quite soon, I do have to mention some very important things. First, the first thing is I'm not a financial planner, so please don't take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You are guaranteed 5 free stocks, each worth up to $2,000, and you could always sell these 5 free stocks for cash and use that cash to buy some Tesla shares. This is a limited time offer that ends in just 6 days, so please check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla, we're down 8.33% for the day, taking a bit of a hit. But I also want to talk about this right here. The entire market was very red. The SPY was down 3.55%. Amazon was down. Netflix was down. Almost everything was down, in my opinion. I mean, looking at the QQQ and the NASDAQ was down a whole 4.99%. That is insane. And I do want to talk about why this is not the end of the world. This is not the end of the world, because I do see the Nasdaq and the SPY making a bounce very soon. I do think they're going to bounce very soon, and it's going to help Tesla run. But first, we got to talk about, why did the market drop the way it did, causing Tesla to drop? Why on earth did this happen? The first thing to talk about is the Bank of England. They are raising the interest rates again, and as a result, they're warning about a recession at a 10% inflation rate. So this is leading to lots and lots of fear in the market, as recessions are associated with slower output and also more unemployment, which is not going to be good for the stock market. And the stock market is often an indicator of a recession starting. When you see lots of big drops in the market, that could be an indicator. So the reality of it does look a little bit more, I wouldn't say certain, but it's looking closer to reality, so to speak. It's not guaranteed just yet, but this did lead to lots of fear, uncertainty, and doubt. Now, another thing is, worker output fell 7.5% in the first quarter of 2022. That would be the biggest decline since 1947. Now, before you look at this data, before you say this is so horrible, you have to know the context. And that's what I think a lot of these articles are missing. You have to remember that what happened was, we had the variant of the virus, right? That one virus, none of us want to even talk about that. I'm not even going to say its name, but this virus came in January of 2022, the variant of it, whatever it's called, the Omicron. And as a result, a lot of workers took like a week off or 2 weeks off. And many analysts and economists estimated that just 1 week off, or like 8 to 10 days, would cause output to fall by 8 or 9%. So the big thing that caused this, or that played a big role, is millions of Americans taking a week off work, maybe 2 weeks off because of the virus. That played a big role. So it isn't necessarily safe to say that we are in a straight up recession just yet. It's not confirmed yet, but I just wanted to put it out there that this did lead to a lot of fear in the markets, because when we see a fall in output, this is similar to like a fall in our GDP. And also, inflationary data did play a role in the drop. Obviously, it's not just because of the virus. Inflationary data had its toll too. So this toll it had, and the negative effects that it could have on employment, that in turn is leading to more fear in the markets. It's leading to uncertainty, the same old stuff. Obviously, the market panics over things like this, leading to a bit of a sell-off. So that's why we saw the market kind of exaggerate. I mean, I don't think we should have dropped this hard. It's insane to see the Nasdaq down almost 5% in one day. That is insane. But as a result of that, my thesis has not changed. I told you that, look, we could be in a bear market still. Okay, the bear market could go on for the next few months. Okay, that doesn't mean the market's going to crash the whole time. What that means is there are going to be temporary moments where the market runs up for like 2 weeks or 3 weeks. Then we have drops for a few weeks and then runs to the upside for 2 weeks. For example, right? You understand my point. So I think we're still in that point where the market is going to rally quite soon. I think that this drop is just an example of the market just panicking, exaggerating, and I still believe the market isn't going to crash after tomorrow. I think the market might drop a little bit more, but we're going to find a bottom and we're about to see a rally to the upside, perhaps by next week. Now, next week we have CPI data coming out. So it does depend on CPI. Hopefully, the numbers aren't as bad as some people anticipate. And as a result, as long as the numbers are not that much higher than expectations, we should be fine from the CPI and PPI data. And it's coming out on, hold on, the 11th of May. So keep that on your calendars. But besides that, on the 11th of May, I'm still more bullish than bearish for the market. I mean, if you look at the NASDAQ, okay, we have this giant gap right here. And this gap is most likely going to take the NASDAQ back to that 12,896 level. So the NASDAQ is going to run in the future. If you look at the SPY, check out the SPY, the same thing. The SPY has that gap around $427. So I expect the SPY and the NASDAQ to start rallying to the upside in the next few trading days. I don't know if it's going to be tomorrow. It could be maybe Monday. It could be after the CPI report comes out. Sorry, it's right here. The CPI report right here. It could be after this comes out. But in the near term future, within a week from now, maybe a week to week and a half from now, I would not be surprised if we get a mini rally and we start to see these things pushing to the upside. And that in turn is going to push Tesla up as well. I do think Tesla is on the verge of seeing a nice reversal, but what on earth is going to cause it, and to what degree is this going to move? So this is where my target comes in my price prediction. So here's how this works. Tesla was on this upward trend. It was looking quite bullish over the last few days, and it was respecting this very well. And today should have been a green day. I mean, historically, after the Fed raises rates, if it meets expectations, the market typically rallies right after. We saw it rallying yesterday, right? We saw that big rally. We should have continued like that, but external things came in the way. They caught us off guard, including the Bank of England making that announcement. So sometimes things like that happen, right? And sometimes shorts take advantage of these moments, but it's not the end of the world. And I do think Tesla's going to make a comeback quite soon. So what we could do is use historical data to figure out where support and resistance levels are. And they can help us understand where Tesla may get that bounce. So right now, if Tesla keeps dropping, we have support at $847 a share. Doesn't mean we have to go that low. It's not a guarantee. We also should have some support around that, I think that 870 level. I don't know why this wasn't marked too well. 870 should be support as well, 873. It doesn't, I'm not quite sure that's going to hold us though, because we did drop below that. If 847 doesn't even hold us, then we should get a nice bounce off 821. Well, look at Tesla's chart from the past. Okay, Tesla touches 821 right here where my cursor is. I know the numbers are small, I can't really adjust them, but we touch 821. We push up to 934. Okay, then we drop again to 848, that 847 range. That's where our support was. We bounced off that. We pushed all the way up to $924 this time. Then we dropped again down to like, what is that, 886. Then we got a bounce off to 955 after Powell ended up announcing the 50 basis point rate hike. Then what's happening? We crashed right back down. We hit our low at 857. So it is very possible we get that bounce off 847. That's where I think we should get it. If not, it should be at 821. So in this range right here, I expect a nice bounce. After the bounce, when the SPY and the NASDAQ start to run, which I think they will within the next few trading days, they're going to fill these gaps most likely. The SPY should be back in the 427 range. The NASDAQ should start to run too, and Tesla should follow them accordingly, and Tesla should get pushed back to that $920 range. So when is this going to happen? I'm not saying it's going to happen tomorrow. I never said it's going to happen tomorrow. It may take a couple of days, so be prepared for that. Hopefully around Monday, hopefully before, I don't know, the CPI report comes out, maybe after, I don't know, maybe sometime next week. But eventually I do see that happening. Now, what is my price prediction, right? My price prediction, it should not be where you solely base your trades off of. It's just me doing it for fun. Well, I predict tomorrow we're gonna get a little bit more red. Maybe we're gonna bounce off 847 in the very beginning of the day. Then the market's going to start running a little bit. I do see some green coming. And if Tesla starts running, we're going to have resistance off. Let me see. So if we are above 873, if we end up dropping, right, to 847, we get a bounce. 873 will be resistance around that range, 870. Then we push up. If we get to 900, there's going to be resistance right there. If 900 doesn't actually stop us and we keep going, then around that $915 range is where we're going to see some resistance. I would not be surprised if Tesla gets rejected off of that, maybe closes tomorrow around 900, maybe in the high 800s. Very, very possible for us to see a green day after this crazy red day we just saw. So anyways, with that said, I gave you guys my prediction. I also told you the support and resistance levels to be looking out for. Here's the big piece of news that came out. Tesla has given us another big update because they confirmed their plans for the second Chinese plant. This was already said a couple of days ago, but the bigger thing is they made a confirmation in letter on the 1st of May about this. And now that in the letter, they also talked about the fact that the capacity is going to have 450,000 vehicles close to the existing plant. And that's going to be huge as they keep on growing and growing and growing. I think they also mentioned the fact that they plan on developing different models as well. And they're going to do it all accordingly as they invest more in energy storage products. So that's going to be amazing for the company. The company is building more and more revenue. And to me, very, very bullish news. Now, as for this part, this is where it's going to be huge. Cathie Wood, she stated this right here. She stated that, in my view, history will deem the accelerated shift towards passive funds during the last 20 years as a massive misallocation of capital. I agree with her on that. And Elon Musk stated this right here. He stated that passive slash index investment is simply an amplifier of active investment. If active investment signals degrade in quality, passive is proportionately impacted. Also, if there are very few actual active investors, their decisions can greatly increase company valuation volatility. Another thing to be talking about is this right here. Cathie Wood talked about the fact that passive funds prevented many investors from enjoying 400-fold appreciation in Tesla from $1.6 billion market cap. That's what the market cap was before during its IPO in June of 2010 to $650 billion when it entered the S&P 500 10 years later in December 2020. Not to mention the fact that it's close to that $1 trillion mark. So Tesla has grown like crazy. It's going to get very close to that 1,000-fold appreciation, in my opinion, perhaps by next year. So that's very, very excuse me, very, very bullish. And then Elon Musk responded with this right here. Let me show you what Elon Musk said. Elon Musk said exactly right before he passed away, Jack Bogle of Vanguard stated that index slash passive funds were too great a percentage of the market, and he really knew what he was talking about. There should be a shift back towards active investment. Passive has gone too far. I couldn't agree more with the claims that Elon Musk and Cathie Wood are talking about, and that is the fact that there's amazing growth in many different sectors in the market. Everything should not just be put into one sector, and that's just another form of diversification in a way, and there is a lot more gains to be made. Cathie Wood is very bullish for Tesla. I'm still incredibly bullish for the long term. For the short term, like I said before, there might be a little bit more downside. I expect a very, very nice bounce quite soon. I do expect us to make a comeback very, very soon. I don't know how many days it's going to take. Hopefully within the next few days, hopefully by next week, we see Tesla in the 920s to 930s, and we slowly start to stair step our way up back to that 950 range. So things are looking just fine. For how should I put this? For the next few weeks, they could be very bullish in my opinion. I'm quite bullish for this month. I do think things are going to be a lot better. There will be some shaky price action for next week because of CPI, but I don't think that's going to stop us at least too badly as long as inflation isn't that bad. I think that the next few weeks for the market should be a lot better than where they were before. And then I do anticipate we could start dropping as we approach June around that range before we see another bull rally continue. So there are going to be some pockets of time where the market drops, other pockets where it starts running. I think we should be entering one of those pockets very soon. And at the end of the day, things are still looking okay. So for Tesla, if you're a long-term investor, Don't worry about the price right now. You know this thing is going to come back. For the short term, obviously, I do see a bit of a comeback in the works. With that out of the way, that's it for this one. Thank you for listening. Tesla to the moon, and peace out.